So my mistake was trying to fit in and trying to just blend in, trying to just not cause disruption, cause problems. But what I didn't realize was that's not value behavior. If you do what everyone else does, you get the same results as everyone else. That's why you need to have an edge. All these rich people that you hear about, they're not competing. There's not a lot of competition there, but there's so much competition here. That's why the tax man comes for you.
As you climb higher in corporate life, earning power increases. How can professionals position themselves for those opportunities to increase their earning powers?
You can't be complacent. You actually should be paranoid. You should be trying to figure out how do you diversify your income streams. If you have one income stream, how do you get more income streams? I started with angel investing. Statistically, you've got to invest over 20 companies to have that statistic work for you, that eventually you'll get one that actually pays for all the other 20 and gives you an extra XYZ. That's super hard, and no one likes to lose money. Most startups never go past 2 years, let alone 5 years. It's better to buy a company that's got 5-year track record, cash flow, maybe 10 years, cash flow been running, got good client base, so you're not starting from scratch.
You suggest that instead of buying a house, people should consider buying a business first. Why do you think that is?
If you build a business, you start building real wealth. You don't have to fund the whole business with the money that you have. You can put 5% equity, 10% equity down and get a bank or another organization to lend you the rest. I say that because if you can build a business, the cash flows from that business can pay your mortgage.
Welcome back to another episode of the podcast. I'm your host, Atto. We have a special guest in the building. We have Darren Johnson, who's the Global Chief Operating Officer at Impax Asset Management, a leading specialist in sustainable investing. With over 2 decades of experience in asset management and operation, Darren has also built a track record as an angel investor and business buyer, having made more than 40 early stage investments and acquired 2 businesses. He brings a unique perspective on turning salary into assets and building wealth beyond traditional property ownership. Darren, how are you doing today?
I'm doing all right. It's great to meet you in person. I've heard a lot about you, so it's amazing I'm honored actually to be sitting here. So thank you for thinking of me.
Nice. That's nice. I didn't know that you had heard that much about me, man. You know, these days, I think for me is like, I'm always focused so much on the work, and that's still my primary focus. So sometimes, you know, not that I don't know the impact, but sometimes I don't take time to sit down and take the impact. I'm just like really just focus on, okay, let me try and make the next great content or the next most, you know, valuable content. That's how I kind of think. Cool. Yeah. So I'm honored to have you on the podcast, and I feel like we're going to learn a lot from you. And this is a subject that we've never really spoken about on the podcast, but it's such a unique way to, you know, think about building wealth, especially with like your primary source of income, your job. So if a listener was meeting you for the first time, what would you want them to know about you?
I was once told it's better to introduce yourself talking about the future as opposed to the past, you know. So who am I? Well, what I'd like to say is that I am very much about transformation, very much about building scalability and inclusive businesses. So my business, you know, I very much enjoyed transforming it from an operating standpoint and making sure that we have the resilience and the scalability to take on assets from around the world and making sure that we are as innovative as possible. So I'm all about the transformation and making sure that we bring our leaders together, and we are a very inclusive business because that's the way we win. So that's me. But my more broader kind of explanation of me is that I am a global COO. I've been doing the job of COO for about, 19 years. So a long time. I was probably one of the youngest, and certainly the darkest, let's say, in the, industry when I started. No stats on that, but certainly I was a unicorn, especially given my background as well. Not the usual trajectory, into the role, or industry that I'm in today. And I think, you know, we'll talk more about that, but I think a lot of that is from, you know, how I was born, how my mother raised me, all the experiences that I've had. And it's kind of made me who I am today. So I just want to fix things. I want to see value. I'm very much about value, in my work. What's the ROI? That's how I live. I don't mind doing anything, but what's the ROI? How do we do this? And how do we make it sustainable? As I say, and how do we make sure we can scale it, etc.
That aligns so nicely with buying businesses, because I'm sure that when you're looking at buying them, you're probably thinking, oh, what's the actual return on investment in terms and on one side, and also how can I extract more value on this business that we're doing. You've kind of found your calling in a nice way, because a lot of people do struggle with doing that. So it's going to be interesting to like unpack like how you kind of found that. So I wanted to know from you, right? Was there like any moment in time where you felt like, yeah, I thought that I could create wealth for myself?
I think as a young child, I always wanted to be wealthy. I think a lot of it is because my mother, who mainly brought me up, she worked 3 jobs. She was a psychiatric nurse. And seeing her work so hard made me want to work hard. And it also made me want to, I mean, when I was a kid, I said I want to buy my mum a helicopter, you know, just creative things like that. I just had this ambition that I want to be wealthy. And so, luckily for me, you know, you do like put things in the universe. And what happened for me as a young child, my mum doing her 3 jobs, I lived with my older sister. She's 32 years older, but we lived in a council house in Clapham, a top floor council house. My mum had to go and do night duty, and then she would do day duty, a little afternoon job, come and sleep for 4 or 5 hours and then repeat. So crazy. But what I meant was, I was left, with my sister a lot of the time by ourselves, and we had to look after ourselves. We had to, understand how to, you know, wash our clothes, wash ourselves, get ourselves to school, all of those things. And this is from about the age of, around 6, 7 years old. And one thing that I did when Mum went to work in the evening, when she did her night shift, I used to watch TV. So she used to ring up, check we'd gone to bed. So I'd pick up the phone, pretend to be groggy, and then I would put the phone down, hope she's not watching this. And, I would go and turn on the TV. And what I watched was a program called Family Ties. And it's I don't know if you know who Michael J. Fox is, but Michael J. Fox, his, you know, breakout, role was, Alex Keaton in Family Ties. And he, basically that character was someone that was the opposite of his parents. His parents were tree hugging, so to speak, left leaning parents. And he was, this is an American sitcom, and he was Republican, capitalist, want to be, wealthy, want to work in finance. And as a young, child, I resonated with that character. Sounds terrible, but I resonated with that character, and I wanted to be him. And that's the only reason why I know of my industry. Otherwise, I wouldn't have no idea of my industry today.
Interesting.
Yeah.
Really?
So that's the thing. Yeah, that's the thing that drove me, because I was like, I want to, that's what I want to do. And and I could see that's where wealth is. So finance, money, this guy, that's what he wanted. So I wanted it too. And it kind of drove me because of my circumstances. That was my way to try and resolve my, condition when I was a young
person. So you discovered finance at a very, very young age, and you knew that you wanted to, go into it. So how did you, what was your path into it? Was it like the traditional path?
No, not traditional. Oh, no. So, when I finished college, got some good grades. Obviously, should I go to university or not? For whatever reason, I remember having this conversation with some of my friends at the time. Yeah. And I was like, you know what? I think experience is more valued than a degree. Right. Okay. And back then I also wanted to earn money. I wanted to be wealthy. Not that I didn't have any job, because I worked since I was 13. I was always doing a job. But I wanted to earn proper money, and I wanted to literally go and get a job. So I applied, and I applied for a job. I didn't even know where it was, but it turns out it's in the city, London Bridge. And it wasn't a finance organization. It was an aviation organization. And I, got a job. I applied, and they interviewed me, and they gave me the job. My God, you know, I'm the only black person in there. I'm the youngest there. And, I got a job as a management accounts assistant. Okay. Or assistant management accountant or something like that. And I got this job, and I'm here in the city now. You know, as I say, only black person in the business, young, thinking, what am I doing here? Imposter syndrome, that definition absolutely was me. Like, oh I can't believe I'm here. And when I was there, did well, started studying the ACCA. And then, you know, I still had this yearning. So literally across the way from my office, there was I think was a trading floor. Yeah. And then all these guys every Friday, you know, you see bowls of champagne, these guys enjoying themselves, looking rather wealthy. And I was like, I haven't achieved what I want to achieve. So I was like driven to how do I get over there? How do I get on that side of the fence? And, so after about 2.5 years, I saw a job and what I should say also, that my friends, so by this time, some of my friends, 3 years, some of my friends were coming out of university, getting their first jobs. And they getting their first jobs, called me up, I'm on this salary. And I'm like, what? You're getting paid more than me. So that's another motivation, so, anyway, so all of that came together quite nicely, and I saw a job, and I didn't know much about it. I just saw investments, because I didn't know. I saw this on TV. I had no frames of reference. Back in my day, we had Arts Jeeves, right? We didn't have Google and all sorts of things, right? And it wasn't very good either. So there wasn't a lot of ways of getting knowledge and information. And my family, unfortunately, none of them came from finance. They did what are called normal jobs, let's say. And I didn't have anyone to speak to or ask. So when I saw this job that just said investments in it, and it's talking about, some investment banks and fund accounting, all this stuff, I saw it and I thought, okay, that sounds like, that sounds like the thing. Sounds like what I should be doing. And so I did my CV, and then back then I still had a lot to say. So my CV, it always says it's got to be a one pager, right? So back then I thought, you know what, my CV is over 3 pages. I got a lot to say, because I started working from 13. I need to sell myself, and I can't sell myself in 1 page. I need to make sure these people understand there's talent here. And I also had an acute knowledge that, I didn't have the same platform as others. I had a disadvantage given my background. So I knew that. So I was like, how do I sell myself? So I had to write enough for 3 pages. So I wrote the CV, and I thought, you know what, if I send that, no one's going to read it. So what I decided to do was do a 1-page summary, and I did all these, it's not going to sound impressive now, but it was back then. I did all these hyperlinks. So basically I did a summary CV, and I did a hyperlink for each job, each role, each thing that I talked about. And then you click on a link, you go to the detail in the CV, and then you click and you go back up. And I did that, send that CV out. Everyone I got a CV offered me an interview. Wow. Because no one had ever done that before. And so I got this interview for this job. This job was working with investment banks. It was local authorities invested in some of their money with investment banks, and they were kind of the middle layer, like trying to make sure that all the accounts were correct and all this stuff. So it was a job to speak to investment bankers and traders and all this stuff. And I literally went for the interview. They knew I knew nothing, but I came across really well. So I came across really well, and I said, you know what? We're going to offer you a second interview, but we're going to ask you 3 questions. What's a fund administrator? What's an equity? And what's a custodian? Okay. And back there again, what? I don't know what you're talking about. Like, how am I going to, and I said, I smiled. Yeah. Okay. Sure. Offer me a second interview. So I'm really happy, but they want me to come back and answer this stuff. So I'm like, how do I even start? So I go home feeling sorry for myself, watching TV again. And then I see a advert come up, and it's Scottish Widows. And I see financial services organizations. I thought, oh, okay, let me get the number for that. So directory inquiries back then, nowadays you Google, but directory inquiries back then, got the number, rang them up, told them I was doing a dissertation for university, and I need to know what a fund administrator is, custodian, equity is. The lady, I wish I knew her name. I think I once met the chair of Scottish Widows, and I told him this very story many years ago, and I wish I met this woman, but this woman transferred me all around this organization, and literally I'm busy writing down everything they're telling me, and I'm writing it down. And I thought, I need to make sure this is innate in me. So when I go and speak, when I go to a second interview, I'm saying it like I know it. I've done it for years. Yeah. So then I took some of the information, went to the library, Croydon Library at the time. I lived in Croydon at the time. And just studied. And then I went home. I was in the mirror talking to myself to make sure I'm saying it properly. And then I went to the interview, 10 minutes. I think it was less than that. They gave me the job. And that was my first start into finance.
I mean, you deserved it.
Yeah,
you put a lot of effort into it.
Yeah, I didn't realize at the time. I just wanted it. So it wasn't even like effort. It was like, I need to give myself an edge. Like, how do I?
And this is literally it. I know. Literally, a lot of people wouldn't even put that much effort. A lot of people give up or try and blag it. But you made sure that you gave yourself every chance, from the CV point of view to even knowing those terminologies as well. Right. That's wow.
And I've always been like that. So I've always, and when I talk to young people, I'm always like, you need to give yourself an edge. The world nowadays, everyone gets a first or 2-1 and, goes and applies for, does economics or business or whatever. Everyone does it. So what's the difference? What's your difference? What's your edge? You need to find it, because if you don't have it, you just become, I say this to I can keep talking, but because I preach about this. The thing is, if you do what everyone else does, you get the same results as everyone else.
Yeah.
Okay. And, that's why you need to have an edge, because I tell my kids, when you go to an airport, and I always point out to them, who's going left, who's going right. And normally the queue, depending on how it's configured, but the queue on the right hand side, or the queue that you see with not many people, and the queue that you see with loads of people. And I kind of say, well, the queue with loads of people, that's, I'm oversimplifying, so I've got to be careful, but that is the average. That's everyone doing the same thing. That's the queue. You see how they're queuing? You see they're waiting to get on the airplane. You see over here, these people ain't queuing. Do you know why? Because they're giving themselves the edge. They're doing something different. They're not doing what everyone else does, and they're getting different outcomes. That's why they don't queue. In other words, there's no competition over here. There's competition over here. It sounds funny, but all these rich people that you hear about, they're not competing. Like, there's not a lot of competition there, but there's so much competition here.
Yeah.
That's why the taxman comes for you. That's as simple as that. That's as simple as that.
Oh, we need the taxman to stop coming for us. So along the way, what mistakes or setbacks do you think shaped your success?
Yeah, I think imposter syndrome. So I never understood my own ability. I never understood my own difference. I never found power in my difference. What I want to do was just fit in. All I want to do was fit in. So conversations, I don't know what I'm talking about, but I would just, pretend I know and try and fit in and not stand out. That's all, I guess my programming was. Don't cause a fuss, don't cause an issue. You're lucky to be there. That was literally my mentality, starting out in my career. But what I didn't realize until, I was in one meeting, and, there was something, I can't remember specifics, but there was something going on. And I just remember feeling so frustrated, cause I thought I knew the answer. I felt I knew the answer, and I just said it. And I said it, and I just remember the moment everyone just stopped, looked at me. And then, the most senior person in the room was like, that's a good point. And literally after that, I understood that I actually have power. It's not, I'm not seeing things wrong, because I'm like, why am I thinking it? No, everyone else is, but I'm saying, and I've said it, and this person understands what I'm saying, and they think I've said something right. Oh my God, maybe I need to go with this feeling a bit more. Every time I get this feeling, and maybe I need to speak instead of trying to just nod my head and do that group think. Actually, say what you think, say what you think's right. And that was the most empowering moment. So my mistake was trying to fit in and trying to just blend in, trying to just not cause disruption, cause problems. But what I didn't realize was, when I talk about value, that's not value behavior. Value behavior is actually, asking the right questions and saying, if you don't understand, or saying, hang on, that doesn't make sense to me. Can you explain it so it makes sense? Those are powerful questions, because as soon as someone, maybe they realize actually whatever it is isn't as it seems. And, I certainly had that. And I think that's really helped me. Once I unlocked that in myself, that's helped me to grow.
XTB is currently giving new clients a free share in Royce when you open an account, verify it, and make your first deposit. And within a few days, that share is yours. I use XTB myself because it makes investing simple and affordable. You pay 0% commission when investing in stocks and ETFs, and you can earn up to 4.25% interest on any cash sitting in your account. You also get access to 10,000 stocks, ETFs, can start with as little as £10 and enjoy quick, secure, and free deposits and withdrawals. It's one of the most straightforward platforms I've used, whether you're just starting or scaling your investment portfolio. So, if you'd like to kick off your investing journey with a free Rolls-Royce share, check out the link below or use code SAVVY and sign up today before the offer closes on the 30th of November 2025. Please note, the free stock promotion applies to the United Kingdom only. Your capital is at risk. The value of the stock may fluctuate. Limited availability. T's and C's apply. How can people become better at speaking up, especially like young people? Because I know, young in my career, I think sometimes you feel like, like how you were feeling, you feel like, I'm going to say a stupid point, or actually, do I have anything to add? Like, how can people become better at like speaking up at the right times as well?
Yeah, I think you've got to be a deep listener. I think what people don't understand is listening is a real skill. And everyone kind of waits to speak. And what you realize when I'm in a lot of meetings, and you realize that people don't actually listen. The meeting before, they didn't listen. If you listen strongly and make sure your comprehension is good, but listen, then when you come to speak, you're going to say something that makes sense, right? That's it. That should give you the confidence. Be good at listening, right? And when you hear something that is not right, you can always ask clarification questions. So what did that mean? So in other words, you're not confronting anything. You're just asking, you just said this, I don't understand. And don't be scared of saying, I don't understand. Could you repeat? Or why is that good? You know, I need to be educated. I don't understand. Why is that good? Or why is that whatever the situation is? So I think for you, it's just being curious and not being confrontational with the curiosity and asking questions. And then you can say, oh, you said this, but I thought it probably means this. Is that what you meant? Just getting the response back starts giving you a bit more confidence in speaking, right? So I'm always about clarification. I don't mind, and again, how did I get that way? I don't mind looking stupid. And actually, at a younger age, because right now, if I don't understand, I'm like the first one to say, I didn't get it. I literally didn't get it. So could you explain it again? And actually, sometimes it's very useful for the person explaining. You know, as I say, when they start thinking about what they're saying, I'm like, oh, actually, okay, or I don't actually and then it opens up a whole new conversation around the table, depending on who's around the table. So I think that you just got to follow your gut. I think that you've got to work on how you frame whatever the question is. So you're not necessarily being confrontational, antagonistic, or saying something that's likely to offend or make someone look silly. Like that's not what we're there for, not to make people look silly. But you kind of try and ask clarification questions just to make sure that you understand whatever it is, that you listen and then ask. I think you've got to listen and sometimes be one of the last to speak. That's the power move. Be one of the last to speak because you're listening deeply. Yeah. And also, sorry, one last trick maybe is to replay back. So, okay, so what you said, this is what I've understood, X, Y, Z. And they might say, no, that's not what I meant. Or yes, you're absolutely right. And then in your head, if that's what then great, you get it, they get it, everyone's good. Yeah. But if there's a difference, and that's a way of trying to, bring up the difference. Okay. Oh no, I didn't say that. What I meant was this. And say, okay, now you can have a dialogue because they're inviting you into this dialogue. Okay. So it's just things like that. I mean,
I really appreciate this fact. I don't think I've ever had anybody on the podcast say you need to listen more deeply.
Yeah.
And I think it can be a bit tough for people to, because I feel like people are always trying to impress rather than, sometimes you're in meetings, you've probably had this experience, you're in meetings with some people and they don't speak a lot, but when they speak, it's like everybody sits there and listen and it's powerful. You kind of want to be that person rather than the person that just, like you say, there's no value in the points that you're just
repeating. You get a lot of people repeating what's been said or rehashing what's been said, all those kind of behaviors. But if you listen deeply, you know who those people are.
Yeah, exactly.
Because everyone's like, that's a new point. That's not a new point. That's a point that person made 5 minutes ago. So I know that you're probably not a serious person. So that's literally, how to do it. Listen deeply. When you listen deeply, you get nuggets in that listening that can help you question. That can help you remember. So last time you said this, now you're saying that. What does that mean? What does that change? Explain, listen deeply. It's a skill. And then when you ask the questions, everyone listens because everyone listens to you when you ask a question because it's likely to be a good one because you listened. And most people don't. It is a skill and it is an edge.
Yeah.
Most people don't listen. They just wait to speak.
Yeah. So you mentioned obviously some of your edges, but I want to know because, you're a senior leader. What would you say are some of the key moments and things that you feel like you've done that helped, contribute to get you to senior leadership, especially as you mentioned that, you got there at a young age too.
Yeah, sure. So I think, I didn't know this, so I'm not saying like I knew what I was doing per se, but I did a lot of different jobs. I always was very curious, always wanted to know how things worked, always asked the why, the questions, get into the root of it. In going up, doing different roles in different organizations and even in some of the big organizations I worked for AXA, Legal & General, others. I wanted to move around. I wanted to do different things. And me being able to do that meant that I've seen how problems are solved in different ways and worked with different people, which is always interesting. Some great people, some people not so great, but having to work with them, I think it really helped me understand how to grow. And actually it was building me up to become a COO because COO, you generally, I guess, understand things and what I used to say is that the COOs I used to work for before, they were like 90% of the way there. If there was a problem, an issue, illegal, whatever it was, they were 90% of the way there. Maybe they needed 10%, a little bit of help. I want to be just like that. And the only way I can be 90% of the way there is to be exposed to all sorts of different issues and trying to resolve them. And my biggest thing is learning from others. So when I speak to service providers or when I speak to other people within the organization, learning and understanding how that happened, what the history was, why that decision was made, all those types of things. And that was my natural disposition. So being able to do that, retaining that because I listen, means that, it's helped me, do my job hopefully credibly, because I listen and I know when, in my mind, when someone's BSing, I know when someone knows what they're talking about. And I'm also a visual person. So when they speak, if I can visualize it, I understand it. If I can't visualize it, I'll keep asking until I can.
Yeah. Okay. That's really appreciating your answers, and it really gives, an understanding into what it sometimes takes. But what I appreciate is that even though you didn't know it, you had your edge, right? You had your edge. You had things that you aimed for. And I think sometimes you have to be intentional like that to be able to get to, like you say, have that difference to be able to get there. So I want to talk about earning power because it's quite important, right? Especially as somebody who, buys businesses. I think that makes it important. And obviously we want to help people to do that as well. As you climb higher in corporate life, earning power increases. How can professionals position themselves for those opportunities?
Opportunities as in
opportunities to increase their earning powers.
Yeah, I think you always, so as you know, well, as all of you should know, all your peers, people that are employed, like you can't be complacent. I always say to young people, complacency has never helped anyone. Like there's no positive in being complacent. So you actually should be paranoid to a certain extent, and you should be trying to figure out how do you diversify your income streams. If you have one income stream, how do you get more income streams? So you got to think through that. Okay. And sometimes, like for me, I thought through that quite a bit. And as you have a family and you have children and a wife and all these types of things, you need to figure out like your time, like it flashes by. You might say, I'm 25 years old. I've got loads of time. Literally, you'll close your eyes and you'll be 45, right? I can't describe it to you other than it flashes by. So you have to start putting in foundations. And I would say structure yourself before you need to structure yourself. So before you've made your money, go and see a wealth advisor. Don't worry about it. Go and see a wealth advisor. Go and see a lawyer. These are investments that are worth doing, right? To figure out how you structure yourself for the success hopefully you're going to have. Because you can't, when you start making a lot of money and then now you want to structure yourself, no, that you can't. The tax, there's nothing you can do. You're going to have to pay your tax, right? But if you thought about it before and you put those structures in place and now you make your money, you're good. So you must do that first thing, I'll say. What else? So once you have your platform, depending on what that platform is, right? You don't even need a platform. I was saying you have a platform, but you don't need a platform. What you need to do is think about what's needed, what problems need to be solved in the world. You probably hear that all the time, but what problems need to be solved in the world and how can I solve those problems? Now, I started with angel investing, right? So I thought, you know what? I've worked for companies. I think I understand a little bit how companies run, being an operations. I think that I can probably identify a company that's good to invest in. And then one of my friends, actually, he used to work for Sega, the computer game company, and he was going to San Francisco. And back then, when I first did my investment, I can't remember now, it's a long time ago, at least. And he said to me, I'm going to Silicon Valley. I'm going to San Francisco, getting close to there. And, I've got some people you can meet. Because I told him, I started telling him I really want to try and find a company. You're hearing all about Google and all these companies doing so well and everyone making billions from investing. I was like, I need to get part of this. So when he told me he was going to the US, San Francisco, I was like, I'll come, if you know some people, I'll come with you. And I went out with him to just for a long weekend, literally a long weekend. And he introduced me to all these young CEOs of various companies. Yeah. And, there was one company that I liked. So all of that is still tech boom, right? And one of the companies I liked was actually, bricks and mortar company that I liked, a company that, came up with something called silver, using silver to clean linen. And they used to, clean the linen of hospitals and things like that. Okay. So that was my first investment. So basically back then it used to be you meet all these CEOs and actually they interview you because they've got enough money. Like everyone wants to give them money. So literally they interview you as to whether they want to take your money.
Okay.
And so you go out and you would literally have a drink with these people, hang out with these people, and then you spend some time, talk to them. And there's like a few of them. And then in the end, they tell you all about the business, blah, blah, blah. If you get on with them, then they talk about investment. And then so they talked about investment and I thought, okay, so I wrote a check. I invested, in the company and that was my first angel investment. And then I carried on and I've invested in loads of things, even a effective syndicate. I've invested in portfolio companies, all sorts of things. Yeah.
Wow.
Different industries.
That is, if we've got time at the end, I'll definitely will, because I think we've talked a little bit about startup investing more than angel investing. I know it's kind of similar, but it'd be good to unpack that a little bit and what your experience is versus obviously buying businesses, which is, do you prefer the buying businesses?
Yes. Okay. So I'm going to say everyone right now, the opportunity. So what people fail to realize.
Yeah.
Well, I always knew. So I didn't just buy investment business. I did some reading about it. I knew that, most of my investments were probably not going to make money. I'm looking for the one unicorn that's going to do really well. Right. So I understood that. And if statistically, you've got to invest over 20 companies to have that statistic work for you, that eventually you'll get one that actually pays for all the other 20 and gives you an extra XYZ. So, I followed that, but that's super hard and no one likes to lose money regardless. Right. And I just thought to myself, most startups never go past 2 years, let alone 5 years, let alone 10 years. Right. So if you want to hack that, give yourself an edge, it's better to buy a company that's got 5-year track record, cash flow, maybe 10 years, cash flow, been running, got good client base, all of this stuff. So you're not starting from scratch.
Yeah.
You've got this business. It's already making some profits for you. That's less risky than building but investing in a business that of course eventually hopes to have loads of profits and hopes to be worth billions of pounds in the future.
Yeah.
So that's it. So if you've got the skill to buy a business, if there's a particular realm that you know about, if you buy a business in that realm and you can go in and optimize that business in any which way. So, for example, you work in asset management and you know that there's a gap with cybersecurity, I'm making it up or something, and there's a cybersecurity business up for sale and you know what asset managers need because you kind of work in that industry, then potentially go and buy that business and then create a whole new client base for that business and start scaling it. And if you do that, depending on what type of business. So normally these private businesses, you probably just on the standard, you value them at maybe 2 to 4 times profits.
Okay.
Just as a standard.
Yeah.
And so that's the standard. So if you can go in and kind of, increase profits by 10, then that 10 is worth 40.
10x.
Yeah.
Okay.
Yeah. But 4 times, just doing the basic maths, right?
Okay.
So it depends. If you're able to optimize even more, maybe you can demand more for it, depending on what industry it's in. But it's a easy way of getting a multiple on your money.
Yeah.
And then if you're able to then buy similar businesses like that and you're able to optimize the operation. So if
consolidate it and
pull out the operation, same people to just work a bit harder and they do whatever, if it's a people business or even a digital business, it's a drop shipping business and you're selling certain types of, items, with a distributor in China, for example, then if you go and buy another business that sells similar products coming from China, all of a sudden, maybe you move to the one supplier and then you get the buying power, the economies of scale of instead of ordering 100, you're ordering 200 now. Yeah. So that makes your business more profitable and you get rid of the other supplier. And now all of a sudden you've made your business more profitable. So if you look at kind of techniques like that, if you're serious about it, you can actually build quite a nice, little big business for yourself, and you can either sell it or live off the cash flows. I mean, if you build a business like that, you could probably sell it for a big multiple, and this is what private equity does. This is exactly what they do.
Yeah, that's true.
Exactly what they do.
Okay. Let's move into the buying business, because I think it's timely in the point of the conversation. So when we spoke, you suggested that instead of somebody buying a house, and I'm going to preface this because people think there's this anti-buying agenda. I think sometimes when we have these conversations, there's nuance that people miss. Doesn't mean never buy a house. When we say that, when we say this, it's like there's an order of things in terms of building your income. And I think when when it's said, it's like people think, oh, you're saying, no, that's not what it is. So I just want to, just put that out there. So anyway, when we spoke, you suggest that instead of buying a house, people should consider buying a business first. Why do you think that is?
Yeah. So you're right to preface it. I mean, everyone's got their own circumstances, right? But I would say that, if you build a business, you start building real wealth. Okay. So you might be income affluent, but being wealthy is a whole different thing. So if for example, buying a house is like buying a business, like you put a deposit down, potentially you don't have to fund the whole business with the money that you have. You can put 5% equity, 10% equity down and get a bank or another organization to lend you the rest, or you go down the seller financing route. There's many ways of doing it. But I say that because if you can build a business, the cash flows from that business can pay your mortgage, right? It can help you buy a house if that's what you wish to do, or just rent, depending on what type of person you are. You might want to move around. One day the UK tax is difficult. Okay, well, if you don't have a house, you can move to Dubai and live in Dubai and have a tax free, and your businesses are paying your rent. You don't need to worry about it, but it means that you're quite mobile. Or you can buy buy a house then, and you can rent that house and get even more income. But that's what you should be doing. A house is, I mean, I do have a house. I do own a house, a couple of houses. But the point is, I did that because I was in the matrix big time. So, so I just followed, like you say, just followed the tradition. I think if I had my time again, I probably wouldn't be so fast to do that. I would have put my capital into buying a sustainable business that I felt that I could grow, or a business that could just give me consistent cash flow. I think I would have done that, because I think, and also people forget, so one is the business and one is the money, but also when you own a business and you are CEO of your own business, it gives you a whole different platform. Whole different platform. You get invited to rooms that you never would be invited in if you were an associate, but you're CEO of a business. People respect and understand what it takes to run a business, and it's probably no harder than the work you do today, to be fair. It's just a different type of work and a different type of pressure, especially if you employ people. But that also is a motivation to continue doing well.
Yeah. Running a business is tough. Invoices, receipts, tax deadlines, it never ends. I used to spend hours digging through spreadsheets and receipts just to figure out where my money was going, until I started using Xero. Xero completely supercharged how I manage my business finances. Before, I was constantly second guessing my numbers. Now everything's accurate and automatic. Invoices send themselves, payments sync with my bank, and I can see my cash flow in real time, all on a single platform. What I love is how simple it makes everything. Xero takes the stress out of bookkeeping, freeing up the time to focus on growing my business instead of being buried in admin. Xero even makes managing bills easier, showing what's due and when, so I can stay in control and avoid unnecessary late payment fees. And when it comes to tax season, everything's already organized and ready to share with my accountant stress-free. It's honestly like having a digital finance assistant that never sleeps. If you're trying to scale your business or just stay on top of your numbers, this is the software that could actually save you time and sanity. And because I use Xero myself, I've got something special for you. Tap the link in the description of this episode for a special offer and start supercharging your business with Xero. And what would you say are good businesses like for first time buyers as well to consider? Because obviously it's like a bit of a minefield, especially when we're talking about buying businesses.
So I think so many, all sorts, right? I wouldn't say go and buy £1 million business, but I would say ideally, if you had the risk appetite, I would say think big, because the bigger the business, the longer track record it likely has. So it's less risky in a way. It's big, but it's less risky because it's got established cash flows. It's probably been in business for 10 years. It's doing okay. I think if you're doing something, start small. So I would look for any drop shipping type business. And there's loads for sale, like on, even eBay, you can buy businesses off eBay. Yeah. You can buy loads of businesses, of different businesses. Some are YouTube faceless channels you can buy, that have been monetized. Yeah. You can, there's so much. Some people actually sit there, build a business, get revenue and then sell it.
Okay.
So some people do that as a thing. That's what they do. Okay. So you can like there's pet food. There's loads of little niches, and some businesses are 5,000 some businesses $100,000, some are $50,000. You know, there's a different varying, price on business. And, as I say, there's different ways of funding a business, but I would say that, start small. I would look for any kind of drop shipping type business. You can buy, there's a website, Empire Flipper. Look at that website. There's loads of Flipper. There's loads of different little websites that you can buy these small businesses. I was even talking to a friend and he's talking about buying a laundrette. Yeah, like, I mean,
old school,
unsexy. Yeah. Everyone needs it. You know, everyone wants it. Maybe you can get some contracts with, you know, potential, hotels or other nursing homes, care homes. All these places are still popping up. The population's getting older. How can you know, if you open up a laundrette today in an area where there's loads of nursing homes, I'm sure you'll do quite well, right? And it's easy in the sense that you don't need to know anything about laundrettes. You buy the laundrette, you employ the people and you get them to do it. And you hopefully make sure you make it profitable and you try and, you know, where you can find the synergies, where you can make it operationally better, etc. But that's not AI-able, right?
That's true. It's not. You're always going to need a laundrette, and
you get reoccurring revenue, and you know, maybe you start a chain. You know, all these types of things. But there's many things that you can start. Like, just do some research.
And with, you know, obviously businesses can be so different because, you know, I can imagine, actually talking about your experience, it'd be good to hear from your experience. I'd imagine you probably were looking for businesses where you didn't need to be so hands-on.
Absolutely. So the reason why I bought the first business was literally for my wife. So she you know, brought up the kids, had been out of work for a long time. You know, sometimes the brain doesn't work the same way when you're looking after kids for so long, and it was important for her to, you know, keep mentally active and also to, you know, try and, you know, contribute to all of us and create this other income stream. So I bought a business which follows one of her passions, which is books. She likes kids to read, but physical books. We bought a business, quite a successful business that she runs today.
Okay. That's fascinating. And how do people find businesses that don't need as much hand holding? So they've got a team established and, you know, things like that. It's not something that you need to be spending. You're not buying yourself a job effectively.
There's businesses 2 hours a week. Most of them are the faceless kind of YouTube stuff, and some are drop shipping. Like, all you've got to do is, you know, the Amazon FBA businesses, right? Facilities, you know, where they where you can all you need to do, they'll do everything for you. You get the supplier, they put it into the warehouse, and they fulfillment business. You can buy that right now. There's thousands of those types of businesses for sale, where people have either set them up to sell them, or where people have set them up, they're running them, and then maybe want to spin out and spend time on another business they have. So like I say, if you look at some of these websites that I mentioned, you will find, you know, our apps, websites, you will find thousands. Now you've got AI, Ask AI. It'll tell you everything you need to know.
Okay.
Right. Honestly, like, you can literally buy a business that's just like turnkey. It's a couple of hours, 3 hours a week, 9 hours a week, working on this business that's making a profit.
So, you know, honestly, it's a whole nother world to me. And this is why I wanted to have this conversation, because I think it's so important to just, for people to open their minds into the ways of, you know, building wealth. Like you said, a lot of people want to start businesses, but actually it's not always necessary for you to do it. And like you say, you can start small, as well. So
start small, buy a few, like, over time, as you get used to it, find the synergies, get it bigger and bigger, and then decide what you want to do. Either you sit on it because it's got great income and it's looking after your expenses, or you have a bigger picture. I want to just build it and then I want to sell it for a bigger multiple, and do that. I mean, this is all completely possible. Selling businesses is like, you know, selling a house. I mean, you can do that. You just got to be intentional, know what you can do. Obviously, try and find something you have an interest in. Don't just buy a business and leave it there. Try and find something that you have an interest in, and, you know, think about the skills that you have. If you've got some really good skills, marketing skills, great. Buy a business that needs a bit of marketing, to grow. Fantastic. There's so many of them that they'll tell you, like normally when you look at the pitch, they'll tell you, I haven't spent time marketing it. It's got no marketing at all. And it's I'm getting a revenue of X.
Wow.
It needs a bit more marketing and so if you've got the skill set and you understand that business, potentially buy the business and market the hell out of it, and hopefully it gets you where you need to get to.
Yeah.
So just find those, if you like pets, there's loads of pet businesses for sale. There's so like I can't. I mean, it's hard for me because I think it's so, like people don't understand. Yeah, people don't. It is personal, but people don't understand what's going on out there. Like,
no,
there's so like as I keep they talk about the wealth transfer and these baby boomers and Gen Zs and all. It's true. Like people are getting older, and my kids are not following me into my profession. They play football. They have no interest in my profession, right? And I'm surprised at that because I thought my kids, and back in the day, everyone followed, you follow your father into your father's profession. It doesn't happen anymore. So these people have built businesses, and actually the kids don't want to run them. So they're like, okay, well, I need to sell the business then, and, then they put the business up for sale, and some of them, care if they've got a business that employs people, they care about the people that they employ. So in those circumstances, that's great because, we haven't talked about it, but, seller finance might be a good option, i.e., you say to them, listen, you work with them, negotiate with them to, basically pay them over time, but based off the profits of the business.
Right. That's interesting.
Which is all private equity. That's all they do. Like,
okay.
They borrow against the business and pay it off against time. So the clever thing is you make the seller your bank. So the seller effectively finances you to buy the business over time.
Okay. Let's stay on that because I don't want to forget that part. So you're saying there are some situations where you can buy a business, but you're using the profits of the business
to pay the loan. So either to pay the loan or to pay the seller.
Ah,
yeah. Because some of them, let's think about tax.
Yeah.
So some of them are thinking, if I sell the business and for whatever million, I'm going to have a big tax bill, right? But actually, I can either manage the tax bill by getting reoccurring cash flow, rather than a big lump sum and having to pay X tax.
Yeah.
So there's many ways. Some people are more interested in the people, so you can talk to them about it because they want to keep the people. And when you're negotiating, you're trying to figure out, well, what's the issue? Someone might say they want money up front, but once you explain, listen, let's do it this way. Actually, over 5 years, I can pay you more than you're asking if you let me structure it this way. For you. So there's many motivations, many ways of trying to deal with that.
What's that called? Seller finance?
Seller finance, yeah. Seller finance.
Oh, wow.
Yeah.
This is all new to me.
Yeah. It's all possible. It's all possible.
This is the thing about education and information. If you don't have, if you just don't know that these things are happening sometimes. So I wanted to ask you, right? If it wasn't obvious for people in terms of when you buy a business, how does one actually what are the ways that somebody makes money from buying a business when you acquire one? So,
well, you make the money. So when you're buying a business, obviously it depends what you're buying. You might be buying assets with it. You might be buying even the cash in the bank. There's so many things, but obviously you're buying a business that's established. It's already selling or doing whatever it does, advising, whatever the business is. So it should be making money because you want to buy a profitable business, unless you buy a business that's loss making because you can get a good deal on it, but you know how to make it profitable, right? So you're buying a business that's, already got profits. Normally you buy, depending, I used a broker to buy my, just to make sure. And obviously you get a lawyer as well. Sometimes depending on the website, actually they offer lawyers and fixed fees to help you do transactions if that's what you wish. Or you can get your own lawyer just to make sure everything's okay. And also you can just buy the assets. You don't need to buy the business. So you might just do an asset purchase agreement, and you might just buy the assets of the business, transfer it into another business that you've got. There's so many ways. If that business has got liability, you're worried because it's got had some historic bad debts or something's wrong with its credit. There's many things. So you guys say, I don't want the shell. I don't want your limited company. What I do want is your assets. So I'll buy the assets and I'll create a limit and I'll stick the assets into that company so it's clean. There's many things that you can do. Typically, if I'm buying a business, I do want its history and I do want its track record. So I want it to be clean. I want it to have a good history because then it means I can get a loan. I can do things and, it will pass its due diligence and all these types of things. So it just makes it easier, but you don't have to do it that way.
Okay. Yeah. Okay. So the way to obviously make money from, a business, obviously cash flow. In terms of, if cash flow recurring, I guess you could pay yourself a dividend.
Correct.
Salary, for example, sell it as well. Is that something that you see a lot of people doing, like buying businesses? Because you mentioned that at the beginning, towards the beginning, buying it, like you said, 10x and then selling it.
Absolutely.
Wow.
They do private equity, small scale, because the private equity business will come and, for example, they'll buy an asset management business. Oh, let me give you an example. They might buy an asset management business with all its operations, its portfolio managers, its strategies, its operations and everything else. Then they'll go and buy another asset management business, which is similar, running similar money, similar strategies and everything else. And they'll get rid of all the operations people because they've already got operations people. And if they've done their diligence properly, the systems will still work, whether it's 100 million or 200 million fund, right? So they'll get rid of everyone in operations because they'll have compliance, they'll have, operations, they'll have marketing, they'll have client service, they'll have salespeople, they'll have everything. The only thing they might not have is portfolio managers to run the strategies. But the rest of it, chances are they can cut away most of the cost. And that means that the business they bought, the revenue that business is earning, and it would have had a cost base, they slash that cost base because effectively they've got rid of the cost base. And now that revenue is literally going into the bottom line now because they've already got an operation that can do all those things. So it's literally, that is literally, if you bought a business and you think that big, like let me give you a real example. If you bought, I'm trying to think what type of business that you could buy, but if you bought, I don't know, what's a good business? Sorry, my brain's kind of freezing now. But if you, I don't know, bought a business that sells, like I gave an example already, like if you bought a business that sells pet food or a particular type of pet food or a particular type of jewelry or whatever it is, like I said, simply however much you're buying now from that supplier, you might have a good deal, right? But if you bought another pet food business that sells similar pet food, right? You just maybe need to rebrand it, whatever. Effectively, if you can use the same supplier, you're going to get economies of scale. And if you're going to get economies of scale, that means that you'll be able to sell at the same price, but get a bigger margin. Okay. And so you can kind of make your profits even more just because of that simple move. Get rid of that supplier. You've got a new supplier. You've got your own supplier, plug them in. And then you negotiate to get a better deal because now you're ordering, instead of 100, you're ordering 200, or instead of 10,000, you're ordering 20,000 because of this new purchase. So there's loads of examples like that you can really make, really try and do. And as you say, you can pay yourself a salary. Obviously if you look at the tax rules, you can pay yourself a particular dividend. You can actually, I think you can earn over 100 quid if you structure yourself properly, 100,000 pounds if you structure yourself properly, taking money out of your business. There's many things that you can do. And as I said, redomicile it, create a parent company in Dubai and pay all the, have a license and pay all the royalties to that company in Dubai and try. There's many ways you can, there's many ways you can structure yourself to minimize your tax burden. Okay. But you need to, as I say, before you do it, go and see an accountant. Structure yourself right and then do it. Don't try and do it afterwards because it's impossible. Like you're not going to be able to do it. It's going to be very difficult, very expensive. Okay. It's like buying a house. If you want to own a property portfolio and you go and buy 10 houses and then you're like, and then you see all the government because now, you can't get all the things you could get with your mortgage, interest relief and all this type of thing is all gone away. So you're not going to get any kind of real tax benefit and all these other, expenses you have to pay and you can't offset it against your self-assessment, right? So now you're like, oh God, I should put it into a company. But if you put it into a company now, you've got to pay stamp duty. Yeah. Right. And then if you've got a buy-to-let mortgage, now you've got to get a corporate mortgage. That costs you even more. Yeah. Right. So unless you're all in cash, but if you're all in cash, then it's like you still need to pay stamp duty. Yeah. Right. And that's a big bill. So do it before. So in other words, set up your company and start buying your properties through your company if you're going to scale. Like if you're going to have more than 2 or 3 or 4, then it probably makes more sense to do it via a company so that you can get the tax benefits of running a property business. Otherwise, it doesn't work.
Yeah. How did you stumble on the buying businesses? Because not many people do it in the UK.
Not many people understand this. That's what I'm here for. I'm here to try and help people. But I think, how did I stumble across it? It's just because it's actually my frustration with angel investment. Okay. And I thought, you know what? Why not just buy a business? Like, why am I trying to talk about it? Why am I trying to set up a business and trying to invest in all these businesses that are just starting out? I mean, don't get me wrong. you might get it right and the business goes on like Google and all sorts and Facebook, all these big stories that we've heard, Uber, etc. But actually, to de-risk that, you don't need to have £1 billion, or you could make the $1 billion by having a business that's already established, and then you just have a strategy to grow that business and scale that business. You can still make $1 billion. Yeah, you know, that's the way you need to think about it. De-risk. So rather than angel investing, think about whether you can buy a business. And as I say, from $5,000 or pounds to £10 million, you can buy a business.
Okay. And then we talked about valuation. You said 2 times?
Yeah, the standard is 2 to 4 times. Depends on the industry and whatever.
4 times, okay.
Profit.
Yeah. Okay. So that's the standard. And ideally, you should really be looking for a profitable business, not like...
Absolutely. Unless you know what's going wrong.
Unless you're some kind of very skilled operator.
You don't have to be that skilled. Because don't forget that you've got a lot of older people, right? So you've got a lot... It's depending on who's selling, because not everyone's old. Yeah. But you've got older people that can't be bothered to modernize. What's AI? What are you talking about? Like, you got so many people like that. I speak to people like that all the time. When I was in Preston yesterday, I was speaking to a family and they're like, we don't even use AI. And I'm like, what are you talking about? You don't use AI? Like, what? Like, no, we don't even use it. I was like, listen, the way you're going to be left behind, right? It's just you don't use, I said, listen, everyone around you is using it. And what you'll see is come year end, right? When these people are shouting about their bonuses or promotions or whatever, and you're still sitting there, that's the reason. You know, you have to use it. But what I'm trying to say is that sometimes the older generation don't embrace some of the new innovation, some of the automation, it's always been done this way. So we'll continue doing it. Yeah. You come in with a fresh face. Actually, don't need to do that anymore. Don't need to do that. We'll put that through this. All of a sudden you've made it more efficient. And that saved you X, and now you can turn that into a more profitable business. That there are examples of that throughout any genre of business that you want to look at.
Okay. I want to talk about financing because it's always interesting, right? How you kind of mentioned similar to like getting a mortgage for property in terms of like putting a deposit on. Is it a similar approach for financing? You mentioned seller agreement. Is there any other type of financing?
Yeah, so just
to finance buying a business.
Yeah, well, you can go to the bank because the bank's interested in you, but not as interested as they are in the cash flow of the business. Okay. So if you've got a business that's making loads of cash flow, they're happy to lend you money versus that cash flow, against that cash flow, right? So that's traditional banks, but also you've got the challenger banks as well. You can also go and get, you know, your friends and family to give you money to buy their business, right? You can also do that as well. And actually that might be a better proposition because the business is making money. Yeah, that's true. Right.
Yeah. You don't have some crazy interest.
Pay back. And then you just pay back over time, your friends and family with a bit of interest. So there's many ways to fund a business, but the traditional bank will give you money against a business. It's more about the cash flow of that business. How long has it been going? What's the cash flow? And if it's got good cash flow, steady business, they'll lend you money against that.
Okay.
For sure.
And do you normally have to put a deposit down as well?
Yeah. So typically, like anything like a mortgage, you know, we're in it together. Yeah. So, typically 5 to 10% deposit, depending on how much you're leveraging yourself and what type of business you're getting. But you can put more, can put less, but it all depends on because there's the special asset purchasing, asset loan people. So they'll loan you based off the asset. So for example, if you had a fish and chip shop and you've got these fryers, there are businesses that will lend you money versus the assets of your fryer. So your fryers are worth 500,000. They'll lend you money against those assets. Yeah. So it's the same thing. There's all of that. You just Google ChatGPT. It's all there. Yeah.
It's very nuanced. So it's not even just against the businesses. There's some businesses that will give you money based on the assets within the business. Like you said, you mentioned like the fryers, which is obviously asset to the business because it's helping them make money.
Correct. Secured against that. Yeah. If you've got a business plan and, as I say, good cash flows, good business, they'll lend you money against it. Yeah. And that's the traditional banks plus the alternatives out there, Bonzo, Metro Bank, all these other ones that will also do the same thing. And as I say, if that doesn't work, you can also get your friends and family to potentially give you money as well. And as I said, you've got seller financing too. So there's many ways to skin a cat.
Okay, so let's assume somebody's secured financing. What would you say are the key steps they need to do to, you know, reduce the risk when they're buying a business?
Let's do due diligence.
Yeah.
You know, due diligence, understanding the cash is king. So what is the cash flow? How is that money being generated? Make sure that it really is happening. The prints, if it's a online business, you need to check how it's ranked. All these things is proper diligence. Now, sometimes when you use a broker or website, they've done some diligence for you. They've gone before they even list a company. They make sure that they've done everything to make sure the company is legitimate. But you need to do your due diligence and its specifics. As I say, my biggest thing is cash flow. Is this real money? Is this really coming in? How stable is it? What the finance looks like? Is there anything they're doing to massage the numbers? Is there anything they're doing with the assets? Anything they're doing to massage the numbers to make it look like they've got more than they actually should. Okay. Any loans that they've got in there they're using to boost up the balance sheet. There's many ways that people can do stupid stuff, but that's why you get an accountant to help you go through the books to make sure that it all makes sense. You've got to be really crystal clear that, as I said, what they say they're earning, what the assets are, all of that ties up. Go and see it. If it's something physical assets, go and see
That's
it.
what I was going to ask.
Yeah,
do you actually go on site?
You have to go and see. You have to go and see what's going on, right? So go and see if it's a lot. You're trying to buy a laundrette. Go and see the machines. How old are the machines? How long have they been there? What's the service record of these machines? How much do they cost? Have they been depreciated? When's the next time you need to replace them? It happens to be the time you buy the business. Okay, now that changes the dynamic of how much you want to pay for it, because now you've got to have this big capital expenditure that you need to negotiate that off the price. So you just need to be very diligent, use professional services when you can. It's worth the investment. Say get an accountant to help you go through the books, make sure due diligence is done. So Experience, there's so many other sites that can help you check out that business. And obviously where possible, you want a long track record as possible, but clearly the longer the track record of the business, maybe it affects the price of the business too. Okay. But it depends on your risk appetite.
Yeah. And this is the thing, as you were saying, I was thinking, it's similar to buying a house, not in the sense of in terms of what you're checking, but how thorough you are. When you're buying a house, you have to be thorough. Yeah, I would argue, hopefully people don't buy houses without seeing them. I don't know.
They do. People absolutely.
Yeah, I know some people
but they rent them, right?
So they're
buying not to live in
it. Yeah. Sorry, I meant the ones that you live in, but you're right. Yeah. There are a lot of people that do buy houses and they don't see it. But I'm just thinking about, because when I bought my first house, I was checking every nook and cranny. I paid for everything. I paid for a survey. I was the most expensive survey because it saved me money. Ultimately, in the end, it actually saved me a couple of grand. Actually. So I think it's about, like you say, you have to just be thorough and just on top of doing all of these kind of things. What would you say has been your best and worst experiences, you yourself having, bought businesses yourself? Yeah.
So my best work, my worst experience is, I think the worst experience is always when you think you've got a deal and you haven't. And you spent a lot of money kind of getting there, and then for whatever reason they decide they don't want to do it, or they want to give it to someone else. So that's happened so many times, very upsetting. Best experience is when, buying that book company, really clear, broker really clear, everything signed over nicely on the day, everything exchanged, like it should have, very, straightforward transaction. Everything was as it is. We also got, bought loads of Instagram followers, and, it was great because it all came with the business and stuff. So it was all very good. And, that's the kind of brokerage you want to do business with again, right? So that's the type of thing. And also a bad experience is also going in and, sometimes the way you position it with, I had to learn how to position. So I see a business is worth a lot of money and I'm coming in saying, listen, I ain't got the money, but can we do a deal? And you can't, you gotta take your time with that, right? You gotta figure out how you gotta, it's all about the art of negotiation, isn't it? What's his name? Chris Foss. Never split the difference. Never split the difference, just go and, strategic empathy.
Yeah.
Understand what's going on.
So with that one, was it that they felt like, oh, we've got loads of people that
you're not serious. So you're not serious guy, coming in. But that's, amateurish, and, you do learn over time, and also getting the trust of brokers as well. So if there's nothing you can find, but you want a particular type of business, you can talk to a broker. Normally they like to see proof of funds and stuff.
Okay.
And they like to see that you can pay it all, because clearly if you need to arrange financing, that might take time and it may say no. So clearly sometimes they like to see the proof of funds. That's sometimes, but, not all the time. And if you have a, good story, good narrative, they will help you.
Okay. This is a very, it's enlightening, honestly, because I feel like it's just another option for people to consider. People are into property, people are into investing in stocks. These days, crypto, you've got the physical assets, obviously starting your own businesses, but buying business is something that we definitely should talk more about as a way to build wealth, because I think, as you mentioned, this is something that's already existing. And also the reasons for people selling their businesses, it just might be look, like you say, ready to retire.
Yeah, ready to retire.
And this is something that's making good money.
Yeah, I'm pivoting. Yeah. It's like you selling, a nice car, or you selling your house that you bought, which was your dream house, and now you want to sell it. You're moving on to something bigger. Maybe you're making enough money. You've got a business on the sea. There's many reasons for people to want to sell their businesses.
Yeah.
So it's not all oh no, it's losing money and I just want to get out before there's a problem. Or sometimes obviously you get people that are dodgy, but most times it's legitimate reason. I want to legacy. I want to retire. I want to go enjoy myself in Spain or whatever. Some of the talk, and it's genuine. I just want some money to live off. I've got a friend who's got an IT business actually, and he wants to sell the business, and none of his kids want the business. It's a great business, makes good money every year. I think it makes about £1 million every year, revenue days. And it's good money, good business. But, unfortunately, his kids don't want it. So now he's thinking about selling it. Just speaking of that, the one thing obviously you look for if you're trying to buy a business, it's not related to one person. So obviously if you're trying to buy a business and it's all about, I'm the face of the business and now I want to sell it, all of a sudden, it's not worth as much because Darren's no longer running it. So you got to look for those types of businesses as well, where it's based off the soul, whatever it is, of the owner, because it's a business you can't really, it shouldn't be
founder-led business. You don't want those type,
because you can't sell it. I mean, it's not real, because I've got to go to the clients and I'm the new person and they actually bought into the old person. So now all of a sudden I'm going to lose clients. That's something you got to look out for as well. You don't have that.
So, over 70% of people who watch these episodes are subscribed. If that's you, hit the subscribe button. It really supports the channel, it helps it grow, and most importantly, lets us keep bringing you valuable conversations like this one. Plus, you'll be the first one to know when new episodes drop. Thank you so much for your support so far, and enjoy the rest of the show. Are there any other types of business that people should generally try to avoid? Is there any like red herrings as well?
I think, you could say that for any business. There's no, obviously, the online type businesses, actually the business we were talking about, 2 hours, 3 hours, 5 hours, it's not avoid it, just obviously do your diligence, right? Too good to be true. Too good to be true. Just do your diligence, make sure, buy from a reputable broker or platform, and as I say, make sure that the longevity of the business makes sense. Okay. Right, because YouTube and getting views and doing faceless videos, I don't know if that will not last. I don't know if if people don't look at the videos and I've got a team and it's only one person sat in India doing whatever the work. What happens if that person leaves? So you gotta, that's what I mean by diligence. You really got to understand what it is you're buying, and the sustainability of that business in your hands, not in the hands before.
Yeah, it's important. I think is what I'm learning from this is you have to just do your due diligence and you have to kind of be sure. And it sounds like also you should really try to work in, or try to maybe look for businesses that are in an area that you, maybe not area of expertise, but maybe of interest, and maybe is an area that you understand.
Definitely of interest. I think definitely. I think, listen, you can buy any business to do anything.
Yeah.
If money's your interest, you can buy anything. But I think if you've got, as you say, a general understanding, or can get to know, or have friends, or whatever it is, then that's obviously more helpful than knowing nothing about the business that you're buying, or the industry that it's in, or whatever it is.
Yeah, yeah. What do you think about buyers thinking about their exit strategy as part of buying a business before? Yeah. Is that something that people should consider before they
I think, the exit strategy is the same way you bought the business, right?
Yeah.
So depending, unless you make it huge, right? So if you make the business huge, then you can start thinking about, well, do I go on the stock exchange?
Yeah.
do I IPO this business?
That is very true.
That's the exit.
Yeah.
You know,
that's a crazy
yeah,
exit.
that's the exit, you know, depending on how well you've done. Otherwise, you'd want to flip the business the same way you bought the business.
Yeah. Important. Okay, so I want to move into the future and AI. You mentioned AI a little bit, right? And I think it's important for us to discuss this before we end. So when we spoke, you said the key is not chasing AI itself, but supplying the ecosystem. Can you unpack that?
Yeah, well, it's most things. It's like, you know, we talked about this when I came in here, and I was like, okay, the best way to explain that is to say, you can start a podcast today, right? But what you know is that unless you're successful like yourself, it's really hard.
Yeah.
Because everyone every day is setting up a podcast, right? Yep. So if you want to try and make money and get sponsors and advertise, it's very, very hard. I'm not saying everything hard is worth doing, right? But I'm saying it's very, very hard. But maybe think out of the box. Yeah. Think, how about, so if podcasts are booming, well, they need space. They need a studio. They need sound. They need visuals. They need all these things. So why don't I not set up my podcast, but actually supply the service to allow people to do podcasts? So I can supply a studio. I can rent a small flat. I can put some furniture in it. I can get some furniture I can do up, make it look nice, put some pictures up, just like this room, buy a couple of cameras, big investment studio, and advertise it. And get people to come and use my facilities. Yeah. That's a much better way, because then you're not betting on whether the podcast will be the best podcast in the world. You don't care whether it is or not. You're still making money. So it's the same with AI. Like, you know, when I think about Elon Musk and some of the new industries that may occur, right? So, you know, we're going to have autonomous driving, hopefully very, very soon, although that's been promised for a long, long time. You know, he's got, what's it called? Optimus. Is it Optimus?
Optimus, I think.
The robot that he wants to bring out. I'm like, if this guy does what he says he's going to do, because I've seen that robot and I'm like, you know what? I'd have one. You know, I'd have one in the house doing stuff for me. I'd absolutely have one. I've got no issue with it. And let's imagine it takes up, and it probably will in the US, all these very wealthy people. I'm sure it will take up. I am sure it will take up as long as it's good as the promise. And that's great. So how do you monetize that? Do you buy those robots and try and resell them? No, I don't think so. I mean, what you should be doing is think about, what's the parts? How can I supply the supply chain? Yeah. How can I get these parts? Because these robots will break. Something will happen. How can I supply? I'm not saying supply the arms and the legs, but what about the wires, the chips, the whatever inside that robot that if it kicks off, that people are going to want in demand? Why don't you just establish what those things are now and start building that supply chain and start selling it? Yeah. You know, so that's what I mean. I'm like, AI is great. It's a great opportunity. Obviously use it, do what you want to monetize it, but then try and get behind AI and think, well, what's needed? Is it servers, data centers, chips, all sorts of things for AI, training, courses, all sorts of things. Businesses, you know, the large businesses will have all the money in the world to get people in to tell them. The small businesses don't have a clue. Yeah. And they missed a competitive advantage. If they're using AI, they can compete with the bigger businesses. But most people, going back to maybe legacy owners that don't understand, they don't know how to do that. So why don't you set up an AI consultancy and go and target those small businesses and help them use AI methods in the way they operate? Yeah. That's going to make you money. Yeah. You know, and now it's scarce, you know, that knowledge. Of course you can charge quite a lot for it until it isn't anymore, right? But and it's going to take a long time before it isn't anymore. We're still in a way, even though, you know, there's traditional AI that's been used for a long, long time, and you've got kind of the new generative AI. Now we've got agentic AI. Those things are relatively new. They still are not far from being mature. So the opportunities are still quite immense. Yeah.
Thank you so much, Darren. This is like, I really appreciate this conversation. So there was another thing that you mentioned in our conversation. So you mentioned the 4 C's: communication, collaboration, creativity, critical thinking. Why do you think these matter more than ever?
Well, I think those are hard to AI away. Like, you know, you might say, well, everyone's talking about, you know, when we get to a situation where AI can think for itself. I've got the term now, but I think those 4 C's are hard to AI away. And if you can do those 4 C's well, because humans still value relationships, right? So being able to have those skills within an organization makes you hard to AI away. And I always think AI is great, but what it means actually is an opportunity for the human, because the human becomes the premium. So the human is now the premium. So how do you make sure you're the premium? Well, have those 4 C's, right? Otherwise, AI just does the job for you.
Yeah.
So that's what I think. I think humans are now, if you, it's just like call centers. So when you call out the call center, before you used to speak to someone, you enjoyed it. Now you got to tell this robot something, and whether it understands you, don't understand you, you're furious because it's so difficult. And when you speak to a human, you actually appreciate it.
Yeah.
Humans will be the premium. That's what I think.
Yeah. I agree. And I think it's about understanding your positioning within that. And like you say, it goes back to what you were saying earlier in the conversation. What's your difference? How do you stand out and make sure that you have skills that stand out? My final question to you, before we actually end, what advice would you give your younger self about career money?
Career money. I would say, get out your own way. I would say, understand the value of money before you need to. It's not just about being income affluent. It's about being wealthy. So think about how you can put your money to work in the right way to create that wealth for the later you. That's what I would say, because I didn't understand all these things until much later in life. I didn't have the networks to give me that information early on. So I would be saying to myself, the world is an amazing place and you have to lean into it and don't be frightened. Do what you say you're going to do. Don't just say you're going to do it. Actually execute every time you speak. I'll be saying that to my younger self, and lean into your difference. Cause I didn't want to be different. I wanted to fit in. I didn't want to look different, even though I did look different. I just wanted to fit in and, get very small and do those things. So, I would say, no, own your difference. Be proud of who you are and what you can give. You got to where you are, not despite of your background, but because of it. Is what I'd say.
Amazing. Thank you so much, Darren. This has been like such a valuable conversation. We've learned so much from you, from your career, from the perspective of building businesses, and just the wisdom about really how to approach life. I think it's been such a valuable conversation. Really appreciate you and really honored to have you on the podcast. Where can people find you first?
Where can they find me? Well, I try and keep a low profile, to be honest. No. I mean, I'm on LinkedIn. I hardly post, but I'm, of course, on LinkedIn. So that's probably the best way to find me. I'm on the internet. You Google my name. I'm not hiding anywhere. But, no, I enjoy talking to people. I enjoy imparting the wisdom that I wish I knew much earlier in my life, onto people, because I get kicks out of people being successful. Yeah. And I always say, one of my big things that I always say is I want to help people remove the constraints, from them, reaching their full potential. Yeah. So there's loads of constraints in life, and part of the charitable work that I do, I sit on the board of St. Mungo's, I sit on the board of diversity projects, all these great organizations, some other organizations as well, and I sit on those boards just to help remove the constraint from people fulfilling their full potential in society. And for example, St. Mungo's is about homelessness. Homelessness is, if without a foundation, how can you build? And exactly. And that is homelessness. So we try and make an impact in that diversity project. Obviously, that word now sometimes is a bit loaded for people, but I think there is still power in including people. I think it's two people are better than one. I mean, and different perspectives often lead you to the best outcome. And I really believe in that, and I've seen that, even though sometimes it's so difficult. You disagree, I disagree, and we're having this chat, but in the end, so many times in the end, we come to the best decision. Actually, we wouldn't have come to that decision if you just listened to me and you just agreed with me. We needed a little bit of that constructive friction to get the best outcome for the organization, for the family, for whatever the situation is. So I truly believe that there's a lot of power in that, including people, and that's so important if we want to have a world that's prosperous for all of us. And so removing the constraints and allowing people to believe that and feel that is something that I'm quite passionate about, particularly around, young people, next generation. Before it was, people didn't help. I didn't feel like when I was coming up, no one helped me. I didn't feel like it. No one helped me. No one helped me. People looked at me and thought, well, I did it, so why can't you? Yeah. That's that type of mindset. That type of mindset.
Toxic, actually.
Yeah. And and like a lot of my friends and people in my industry and beyond are all about building the ladders for others to climb. All about building the ladders.
Yeah.
And so some of my friends have done such amazing things. Shout out Gavin Lewis at BlackRock, Justin Onakosi at St. James's Place, Rachel Green at where is she now? Can't remember now. Not New Vein anymore. She just left, but Rachel Green, wherever you are, and a few others anyway. Marissa Hall. There's many people that have done so much to build ladders behind themselves for others to climb, and that's a beautiful thing. And I hope anyone listening, as you reach your success, try and take people with you. That makes it real success. So.
Yeah, I agree. I think it's important. I don't know why you wouldn't. Well, I have theories. I don't want to say that, but I think generally speaking, if you get to somewhere, it's nice to be able to be like, you know what, let me help you out. Even if I went through difficulties, actually, I don't even want you to go through those challenges. You know, I don't have that chip on my shoulders. No, I want you to navigate that. Why would you want somebody to go through, shark infested waters if they can go past that? But, each their own at the end of the day. But yeah, again, I really appreciate you, Darren, so much. Thank you so much for just sharing your story. Do you have any final words for watchers and listeners?
Final words. No, I think the world is an amazing place. There's so much opportunity. Remember to give yourself an edge, right? You need to stand out. You want to be in that top 1%. You don't get in that top 1% by, waking up at 7:30 every day and commuting to work. Get up at 5, do some exercise, read a book, do things that differentiate you to give you an edge. Do that. And hopefully you'll have a successful life and career in anything that and personal life in anything that you choose to do. Just try and give yourself an edge. Don't do what everyone else does. Once you do that, you just become everyone else. And that's you firmly in the matrix, living your life until you retire at whatever age that is, 60 or whatever it is. So try to think bigger than that. Try to, as I say, give yourself an edge. Really, really important. It's all out there now. With AI, there's no excuse. You've got everything you need to be better than you are today. So that's what I'd say.
Amazing. Thank you so much, Darren. I really appreciate you featuring on the podcast. Thank you. Thank you for tuning into this week's episode, and see you next week's episode. If you enjoyed this episode, share your favorite part in the comments, tap the like button, and subscribe to the channel. Your support is really appreciated. We'll keep working hard to bring you more valuable conversations.